This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is the markets will go up and they will go down. One of the things that's fascinating to see what's happening right now is last year the markets were down. This year they were largely up, and then at some point in the year they fell when there got to be more concern about inflation and the Fed keeping the rate policy higher and longer for a longer period of time. Now, as inflation has started to decrease, there's tremendous optimism the Fed will start cutting rates next year, and suddenly the market has surged the last 2 months. And this is a wonderful thing to see. It's great fun for any of us holding equities to see the market jump forward and surge. Tremendous, gives everybody that sense of a wealth effect coming the end of the year. Now, one of the concepts that comes out of a book we're reading recently, but is so true, is this book is called Same as Ever. Certain things are always the case and will always be. And it's a book by Morgan Housel. Now, here's the point in the stock market. The more optimistic we get about the market and the belief that it's always going to surge forward like it has the last 2 months, the more that sooner or later there's an event that moves it in the wrong direction. And that's sort of the fascinating thing about the stock market is it goes up and it will go down. And at the end of the day, the only real advice is to have the amount of emergency savings that you need, to keep on putting money into savings, and second, to have an allocation around the market that you could live with. Because when it goes down, you don't want to be so heavily disappointed that it went down and you lost so much money that you pulled money out of it, because the reality is at some point it'll go back up. So the concept is the markets can have ups and downs. You want to have emergency funds. You want to keep putting money into your savings. And then you want to have an allocation you can live with through good times and bad times, and knowing that you can't just grab onto investing a ton and piling cash into the market right now on a momentum concept because, oh my God, it's going up, it's going to always go up, and you have the fear of missing out. But rather you have to measure yourself, get your allocation right, and obviously not overdo it one way or the other. When it's going up like this, I feel bad, of course. I have that FOMO, fear of missing out, that I've got a more conservative allocation than many. The flip side is when it's going down, I feel smug and smart that I have the joy of missing out on other people getting hurt, it going down significantly. The real reality is you need to sort of know your allocation that you're comfortable with, because the market is going to go up and down. In any event, thank you for listening to the Becker Private Equity Podcast. I'm at 773-766-5322. As 5322. As always, we'd love to have your comments, your thoughts. Thank you for listening to the Becker Private Equity Business Podcast. Thank you.